Hi, this is Bruno, and this is the weekly recap for the week starting today, Monday the 4th. It is just about 8 a.m. UK. Market makers are back, so I get proper shapes on my T plus zero, and this is the December regular trade. I posted a short video using my program SOAP yesterday, but let's get back to one. Although I've just renewed for another year, so I'm not here to advertise for my own program. So I will mostly do my weekly recaps on one, even though I shall probably gradually move over to my own stuff for some reasons. Like if you watched that video from yesterday, I wanted to check, for example, what Verma would be looking like in a low IV environment. So I will be using both, but just to use a platform that most of you use, this is one. Okay, so as you can see, we're losing a bit of ground here, and it's time to protect profits. I said I would act around the former resistance around 30.50, so a little late here. We're making about $1,200 plus minus, and it is time to do something about it. So one possibility is just to close the trade. We would make about 4.5% on the 25k planned capital, which is not bad. And in such instance, considering that we have little capital in play, volatility is not really palatable right now, so we would maybe try and get a better price and more theta type of premium by pushing a re-entry to December end, or maybe just doubling up, so to say, on January. If we don't do that, and there's no rush to do that, if there's at least some pullback coming, it's possible to do kind of a reverse RV here. So we would kind of protect profits about $1,100 because there's still about $4 to $4.50, so 450 to make here. Generally, I don't like going delta positive this early. This is something I consider because it's more in line with the Rhino philosophy to do that later. So in this instance, I may want to just add, and that would be the wide-eyed condor. But as you can see, if I place a reverse Harvey here, I would probably go for something between 1 SD and 2 SD on December. There's not much premium. I'm not looking at adding a lot here, just flattening delta, keeping it a little bit negative. And I don't not really looking at much delta. So probably around 3,200, we would get 4 delta, about $2 here. So that's something that can be considered. The additional Vega is more than manageable, and this is a kind of a structure we have already used in the past. So really nothing really new here. So that's one possibility, getting a bit of negative delta. I still assume that if you go back to that other video, that the sinking of the T plus zero would only happen somewhere about 2960, 2950. So that's something that could be done in case of a pullback. If the market would pull back, of course, the additional Vega here would probably not make this CCS perform very well. So we have to, of course, as soon as we switch to the call side, we have to take into account the dynamics of call credit spread. So that's one possibility. The shape overall at expiration is okay to me. This is not my favorite choice, but it is something that can be considered. The other possibility, of course, is just reduce by doing a reverse RV, a little bit of capital control here, and that's it. So delta, we're not adding any Vega. Theta is stable, so that's one way of looking at it. It is a more conservative measure that is probably more in line with the Rhino, the way I trade it. So that's another possibility. And the last possibility would be just to add some premium, maybe a little bit higher than a 28.25, but maybe something like here, 1 minus 2, 1. That would not add much. We just flatten delta a bit We don't have too much worries about capital management, but this would not yield that much, less than $1, about 80 credits. So this is not, because it's placed OTM, it's not the most effective way of using capital. I mean, we would block about 5K for a little amount. So this is conservative, but this would not do much to our trade. So to sum up on this trade, my favorite scenario, maybe on the lazy side, would be just to close the trade and wait for a re-entry point. I feel about the same about in terms of a wide iron condor or a reverse Harvey, probably reverse Harvey with some capital control would be the simplest way to deal about it. Do have capital on the side, and we can then protect profit at a higher level, stay a bit longer in, and if anything happens by keeping capital usage low, we can still do a lot of things, probably more opportunistically. I will review this by the open. Of course, closing or reducing the trade sound like the easiest way out this time. Okay, so now we can go to the BTB trade, where probably less thinking is involved because there's actually far less to do about this trade. And in this case, there's of course the same possibility of closing the trade or just doing kind of a reverse Harvey or maybe simplifying the trade with something like this. No additional capital, protecting profits. So this would be reverse Harvey. Maybe this trade simplification is not 100% warranted, since we are still 46 DTE and about a month to planned exit. You can decide whether you can you can preserve profit, keep capital usage at the same level. You can of course go more aggressive here, but you can also of course choose to pay a bit less by just putting your PDS side around here. By doing that, you protect profit probably around 1200, 1100. So that's one way of keeping the trade in. And then if the market then starts going down again, we can feed negative delta with some higher positioned CCS. So here again, I'm not going to repeat the whole thing again. It's either closing or a reverse Harvey type of adjustment. Let's try and keep it simple. Now the quick look at the new January entry. This one was kind of safe because I placed the upper longs at 3,000. So of course now we are definitely in scaling in type of territory. I said that since I placed my trade a little bit more bearishly positioned, we paid less, so we have a lower upside risk. At the same time, we should technically add some ATM structure, and what would come to mind is to add one or two. I'm going to place two here too. So it could be one or two, but in times of low volatility, a narrowing broken butterfly is usually a better choice. Because the PDS side being weaker, it is not so sensitive to an ATM vol crash. Of course, there are two sides of the coin, but I would say that this would be for a bullish congestion or bullish market, something that is to be considered. So that's probably what I'm going to be doing. We would get a tiny credit on this one, about $0.50, so that will also reduce the upside risk, which is still minimal. So we would get full size for an upside risk around $500, and by using only $13,000, we still plenty we could do if the market would surprise us by reversing strongly. So this is something I can consider, and let's not forget that one of the options on December is to close it, so that we could be then concentrating on this trade which due to low volatility may cause more problem. So this is something I mentioned in the morning notes. And for the BTB trade, although this is not really exciting, I would probably go as per rules with a typical scale in here. So this is the way to go for the rhinos. Hopefully the bull train will stop soon, because we know that there's a strong resistance now on 30.90 and then 31.25. So hopefully we can still remain in the sweet spot here, and even though it's not looking like it would be a very profitable trade like it has been in the last few months, at least we could play safe on this one too. Okay, that's it for now. So I'll be later on Slack. As you have noticed, I have not entered a baby rhino on Friday, and I may do so today. There's no problem skipping a week if the volatility environment is just too crazy. So I'll see how it goes around the open. So stay tuned. There will be a little bit of work just after the open. Bye for now.